It is now time for our ETF report brought to you by Invesco. Inflows into ETFs have jumped 40% so far this year, with investors plowing in more than $488 billion into funds in the first 9 months of this year. So how should you be positioning yourself, especially with the expected volatility around the presidential election next month and uncertainty around the economic recovery? Let's bring in Reggie Browne. He is a GTS Principal. And Reggie, it's great to have you on today. Let's just start by talking about this growth that we've seen in ETFs, a 40% jump so far this year. What do you think's led to that growth?
Well, thanks for having me. I think largely ETF, the structure is is a choice vehicle for younger investors. So we're seeing more use by new and experienced investors to express their views. So that's number one. Two, the adoption of fixed income ETFs have been all the rage. 50% of all flows go into fixed income ETFs. And I think it's helped gain exposure in the bond market pretty easily. I mean, the bid-ask spread of fixed income ETFs are pretty cheap for exposure and compared to underlying bonds. And I think that's driving the flows. But look, $4.7 trillion in ETFs. Some have forecasted that the ETF industry will go to 25 billion in 10 years, trillion in 10 years. You know, it seems like we're on that track.
Let's talk about the expected volatility around the election. I mean, we've heard a number of scenarios, but all of that just kind of leads to the uncertainty around the outcome there. And you've talked about ETFs offering a buffer for some of these investors who maybe are thinking to set aside some cash. What are some ETFs that you think investors should be looking to right now, those who are particularly concerned about the volatility?
Well, look, ETFs do not offer a principal protection, but you can express your views using ETFs. I believe that if there's a Biden-Harris win, the marketplace will reprice itself, and some ETFs will become more important in a Biden administration, such as ETFs around healthcare, clean energy, infrastructure, consumer discretionary, particularly around Amazon, natural resources, and just overall, just the rebalance needed to express a new administration. If the Democrats win the White House and the Senate, I believe that there'll be a big repricing in the marketplace and a need to restructure a portfolio. And so if you have, if there's going to be some expected volatility, which there may if the election is contentious and becomes an event for litigation, the market will whip around a little bit, but it's best for long-term investors to stay long-term and sit out the short-term volatility.
What about investing in bonds, particularly corporate credit? That's an area where we've seen some huge growth there. How do you think investors should be looking at that right now in terms of positioning?
Well, the largest growth in investment grade is BBB or the B series, and I think you're seeing a lot of new issuance. I think 45% of all new issuance is rated that way. It's easy to get exposure across several different bonds using ETFs than to pick for cap structure or any other first position, the individual bond. I think the best way of looking at it is use a broad-based ETF like BND from Vanguard and invest in the entire investable index. And the way that it's priced in the market is pretty competitive. So I think the best way to look at bond ETFs is understand the characteristics of the bond market and then look at the ETF wrapper and see how it's behaving. Back in March, bond ETFs didn't perform well compared to the underlying corporate bonds. The underlying corporate bonds were mispriced and behaved badly in compared to ETFs. And that just needs for changes around market structure for corporate bonds.
And Reggie, you were talking about some of these ETFs that could potentially be beneficiaries on the back of what could be a Biden-Harris win. And I thought it was interesting in your notes, you talked about the potential of crypto ETFs that could play out with a Biden win. I mean, how are you thinking about that? Because, we talk about volatility. I mean, certainly that's sort of been the expectation around cryptocurrencies.
Well, I think that the commission put out a series of points, what has to happen in order for a crypto ETF to be approved. And there seems to be some advancements to there. I think this current SEC commission, they're very risk averse and conservative, looking at particularly retail investors. But I think that if there's a changeover administration, I think some advancements will occur where crypto ETFs will finally be approved in the United States. It's been a long road for that segment. Almost, I can think almost 8 years that some have been trying to get approved. And it feels like it's getting closer. And particularly if there's a changeover administration, I think that a new SEC commissioner and commission, may approve it.
Hey investors, Zach Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.